Commodities and U.S. stocks are trying to claw their way higher Thursday after a brutal sell-off. Lam Research buys Novellus for $3.3 billion, and Michael Kors begins trading on the New York Stock Exchange. I'm Alix Steel, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Alix Steel with TheStreet, and together we bring you Morning Call. We have stocks trying to hold higher here, but Scott, was Wednesday's sell-off enough? Was it enough of a shakeout?
I feel like the combination between Tuesday and Wednesday got most of the momentum traders out of the trade. We've been trying to position for what could be a Santa Claus rally. We've been trying to position for what could be a good trade above 1260 to 1262, and they took it off the table, rightly so. You know, a lot of guys got out on Fed Day because they saw the reversal. We were up like 100. We closed down 60. And then yesterday, there was a lot of good shorts in the momentum names, in your Apple, in your Amazon, in some of those. And now the question is, can the macro investor, you know, stay the course long? And a lot of traders like myself, I'm in very, very small because we still haven't really broken the line in the sand in the indices as well as some stocks and sectors.
So do you think that some of today's rally is going to be short covering versus actual real buying?
I think it's going to be a combination of both, because if you look at the chart of the S&P, you'll see that even though we've had a frustrating, boring tape, we're still holding higher. You know, this is resistance. We're still, you know, not too far from it. If you look at the Fibonacci retracement levels, I want to show you two different comparisons. Remember that rally from the October 4th low all the way up to 1292? You know, when we did have that pullback, we pulled back to the 61.8 retracement, which was right here. You know, remember that ugly Friday after Thanksgiving? And then we resumed. So if you do the same type of method to figure out if there's commitment here, you know, you go to the low, you go to the recent move of about 1262, and if you look at where we are, you know, we're right around that, you know, 0.618, which held the last time. So, and you also have this uptrend that's intact. So if we could stay above this 1200 area, you know, perhaps we get some excitement, maybe some news out of Europe, blah, 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 and you could see a new move here. So right now it's not game off, it's just a little type of game change.
Under 1200, would you get short?
1195, 1205, it all depends how it happens. Okay. Right now we're about -50 on the McClellan oscillator, which shows us oversold. So maybe we go up a little bit, work off that oversold feature, and then obviously get through quadruple witching, because that's always a funny game too.
That's coming on Friday. Yeah, and you know, I was reading a note from the S&P earlier that says they're still expecting a year-end stock rally and into the first quarter of 2012. I spoke to a portfolio manager yesterday who also said, you know what, we could totally get a Santa Claus rally here and no one will be positioned for it. So I wanted to actually take a look at the dollar, because I feel like we're going to be trading inversely to the dollar, so it's maybe our fate is tied to the dollar here. The UUP, and see what's going on.
Well, the UUP has had an unbelievable move because the euro's gotten crushed. So if you look here, no one was really positioned in it, but you know, you did have a trade there. So there is movement. So as frustrated as everyone is, if you're on the right side of the trade, you can make some money here. And it broke out above and put in a little bit of a reversal tail. So that means the dollar could come in a little bit, and that means the FXE, which has been trampled, might go up, and that could also help the Santa Claus rally over the next few weeks.
All right, so let's look in the line in the sand for certain stocks, certain ETFs, to see if they make good buying levels or possibly good trades, or if you need to sit in the sidelines. Want to go to oil first, in particular the OIHs. We saw oil get pretty hammered yesterday. That was not only because of the dollar, but because we had OPEC raising its production targets to 300 million barrels per day. That was up 6 million barrels. However, I heard that it's not going to be a big game changer long term, because that's already their current output. Now it's just official. So I wanted to see if maybe this dip is a good buying opportunity.
I think it could be, and it was a bit emotional. And unfortunately, a lot of traders and investors get emotional about the refiners, because according to very smart fundamental analysts, as long as oil is above 90 and it's at 95, you know, they're still making a lot of money. So OAH is just moving tangent with oil. So if you look at the OAHs, they've been battered and bruised, and they're like hanging on by a thread here. You know, I've been long the OAHs. I've been trying to have a bit of a thesis going into 2012 with this inverted head and shoulders pattern. But the problem is with the right shoulder, it could really go on for a while. And some people got stopped out when we broke this pivot. Some people will actually hold, you know, the right shoulder even as far down as almost the head. So everyone's rules are different. I'm in a tier 1. I'm going to use 108 as a stop. Hopefully it starts to get some traction, and that's why I don't add on weakness. I wait to see if it starts to go in my direction.
And the deal with the refiners is it's really about the spread between WTI and Brent, because basically they can buy it for WTI prices and then sell it for Brent prices. So as long as that spread is significant, then that's going to be interesting for the refiners. Well, they really haven't done that much over this year, but oil services, really the $90 is key.
There you go.
Okay, so let's go to Apple. Totally switching gears here. Also sold off yesterday. You know, I hear the 360 is really the game changer.
Okay, well, Apple had that little box formation.
Yeah.
So it's been a great trade ever since the past few months, both long and short. Yesterday was from the short side. If you take a quick look here, Apple has lost some momentum, but has not been a game changer yet. Last time we had a good short was when it broke this this box pattern to the downside, and then it held the 200-day. You had a nice little rally off of that. Another little bull flag type pattern on Fed Day. You had a bit of a wide range bar there, so that gave you a clue to maybe get out of your long that we weren't going to break higher. Then yesterday, a lot of guys made good money short. So now the question is, do we go back up and retest this 385 and head lower? And if we do, can we hold the 200-day moving average again? So that line in the sand there is about 366 to 368.
So we're not there yet to the point where a long investor can get in and feel really comfortable.
Well, or that the long investor should get out.
Okay.
If you're in a tier 1, you stay there. If you're a trader, make sure you know the short-term composure, because that's where guys are making their money.
And same question here with Amazon. You know, closed near its highs of the session actually, and closed only slightly lower. Was that a good sign for Amazon?
Well, Amazon's been broken for the past month,
right.
And this has been traders are trying to like lean on it, and I think some macro investors already got out of it. And yesterday was one of those reversals that could give a little bit more upside. If you look here on Amazon, it actually broke the line in the sand yesterday, because if you look at the macro pattern here, a lot of people probably got out, and this was late. They got out when it broke this 180 area. But you should have really got out. If you didn't get out on earnings, you had your ascending channel that broke to the downside. This was an area to get out, or then when we did it again, that was. So yesterday, the capitulation type happened. We reversed hard. I think we can get a little tradable bounce to about 190, but right now this stock is more broken than constructive.
So even though we get a bounce, the fact that it broke that important line is a bad
And it's just
sign.
been really weak.
All right, let's go to Google, because we highlighted it yesterday on the street as one of your top stocks for 2012. Is it still? Did it break any levels you have to watch out for?
For the short-term trader, it's been a little challenging, but for the long-term investor, it still looks fine. If you look here at Google, you will see that you got a small little sell signal, 2 days back when it couldn't break and hold above, this 630 area. So if you weren't committed to it, here was your short-term sell. Had a little bit of follow-through. It did hold this upper range. I'm long a little bit. I think the line in the sand here really is the 50-day, which is 592, and that's why it's a little frustrating for traders, because although it could hit 592 and then go up next year, that's a long way for a trader to hold, about 20 points, so you have to know if you're that committed.
But holding above the 50-day is much better than the 200-day, like a lot of stocks and ETFs have actually plummeted through.
So that's relative strength, and that's why it is on my radar for next year.
And the last one I want to hit up with MasterCard here has been on a nice steady climb since October. What's the level we have to watch for this stock?
Well, MasterCard right now actually got a little weaker versus Visa, so I want to pay attention to it. So if you look here, you will see that you do have an uptrend in MasterCard. Here's that low from October. It touched it here, and now it's right on it. So, I would say for momentum, I wouldn't say game over yet. If it breaks this 361, momentum actually left right around here. If you're a momentum trader, you were out around 368. So I would watch yesterday's low. If it breaks this, this also could have a move to the 50-day and still be fine. I would say this is the line in the sand on MasterCard between the 50-day and this prior pivot. If that starts to break, then things are changing. And
very quickly, let's go to Visa and just take a look at it to see what's its line in the sand, because if it's holding up better, maybe we're going to see a retest if MasterCard brings it down.
Great idea. So if you look here at Visa, you'll see that the flag, is still intact. Where MasterCard broke below it, this is holding up. So I would say if the market does get stronger in the next few sessions, it starts breaking above this 97.50, perhaps this could act really well. But if all of a sudden, today's up move doesn't hold, this one could be at jeopardy here. So if it starts breaking below 95, if you're not committed, get out of the way, because the 50-day here is 92.92.
All right, so that's it for this segment. But stay with us, because we're going to be talking about gold and much, much more.
Hi, I'm Sean Hendelman, CEO of T3Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
As promised, we're going to talk about commodities, but Scott, before we get to it, let's go to the FXE, because as we're seeing, most commodities are now trading in tandem with the euro. So what is the euro predicting perhaps a bounce here?
Oh, I think we had enough devastation in the FXE in the last few days that you might get an oversold bounce. Every trader has this up on their screen now. You have to have it. It's been dictating movement. And when the FXE, if you see here, broke below that 131, that's when commodities really got hit. This was that October low that was taken out 3 days back. Okay, now that everyone's been stopped out, what typically happens is sometimes you get a bounce to retest that broken area of 130, 158, and if that's the case, that means the dollar goes down a little bit, and that means the commodities that have been so battered and bruised could have a little bit of relief. But the question is it just an oversold bounce for traders, or can it be sustained? And we'll follow that action as it moves forward.
And then so let's highlight gold. This was a really big deal yesterday, not just because I cover it, but it broke and closed below its 200-day moving average of around 1618. Now, it needs to be down about 1520 to make it in a bear market. It would be down 20% from its high of this year. So it's something to keep on your radar. How much damage as a trader did you see?
Well, sometimes gold is very violent, and they like to get everyone out as possible. So a lot of people have stops at their 200-day.
Right.
So what's interesting is that they break it below the 200-day, they get everyone out. But if it reclaims that 200-day in a session or so, it's more bullish than bearish. So if you look at the chart of the GLD, you will see that it held a big level. Yesterday I talked about it in the morning call that if obviously you had your top right here when it broke out and failed, that was a sell signal. Here was that last wedge that broke to the downside. Then you have this macro wedge that I know it did it overnight, but you still could have made some good money short. So coming into this low, okay, as it broke the 200-day, I was trying to tell people to cover a little bit, because look where it is. This was the old breakout from July. Sometimes it serves as support. So we'll see right now what kind of bounce we get in the GLD. Does it reclaim the 200-day around 157, or does that serve as resistance?
And at one point, gold was down almost $100, and it closed off its lows of about 20 bucks. So there obviously were some buyers in there. I also spoke to one strategist who was recommending that you buy long into about the 1600 level, but if you broke below that, to sell. So there are those tight stops which accelerated any selling, like you just said.
Right. So anyone using those type stops, they got out and they got shaken out. They were uncommitted. So that's why sometimes it's bullish, but you have to really monitor the next few sessions to see what type of bounce you get, whether it's feeble or there's force.
And speaking about being bullish, let me just share with you this stat. It's really fun. From Bespoke, said that the 6 times prior, from 1976 to now, when gold closed below its 200-day moving average, gold has risen on an average 0.5% in the next week, 1.5% in the next month, almost 5% in the next 3 months, 9% in the next 6 months, and over 20% in the next year.
So that just shows you how they try and shake everyone out.
Right.
So if they don't do it this time, that could give you clues that really gold might be in for tough sledding going into the first quarter of 2012.
So let's go to silver, because that got hammered even worse, down over 7%. Where's the line in the sand for silver?
Silver actually held it yesterday, but it's just been, what's the word? Oh, it's disappointing. Anyone that's been trying to play silver off of gold ever since that parabolic move, they've only had small little trades with no traction. So if you look here at the chart of silver, you will see that this is when it broke to the downside. It had a feeble bounce to fill this gap, but it was sort of tradable. Then it wedged like gold, and it broke to the downside. But this actually held, which is sort of interesting, above that October low where gold broke below it. So maybe it's not as violent, or there's not as many traders involved. I think if gold bounces a little bit, maybe you get the silver bounce to close this gap to about 29.77. So there's a small trade here. If it fails there, then the next time it gets to this level, it could really break low if they continue. And
very quickly, want to hit on ag. We had corn down just under 2% yesterday. How did the ferts fare, the fertilizers? They've been getting a lot of downgrades recently.
The fertilizers have been horrendous this year, and every time we've tried to play them for trades, they've failed. There's a lot of talk, though, for 2012. When they bottom, it's going to be fierce, it's going to be fast, so it's on my radar. A lot of people think that we can't manufacture our way out versus China because their labor is just too cheap. But we have so much farmland, and there's an indicator out there that I think they say farmland is going up a little bit, so that could be
farmland prices.
Farmland prices. So that could be a prerequisite that the ags might do better. So maybe we could feed the world, we just can't manufacture for them. But it hasn't evolved yet. So if you look at the MOO, M-O-O, just to throw an ETF out there, it still looks okay. You still have a bit of that inverse head and shoulders pattern, which is a bottoming pattern. But the question is, when do you get that fierce day where you want to get like a big wide range bar, almost reversal like this, kind of like you had here, that leads to a big move. So that hasn't happened yet. So being tier 1, that's it. When we get a move like this, maybe from a higher level at some point into 2012, then it could ignite, and then we break this downtrend, then you could add.
All right, let's go to some quick ways to make some cash today. Scott, we had Lam Research buying Novelis for over $3 billion. Want to look at KLAC in particular to see if it's a good trade. Are you looking at that stock today?
I'm going to look at all the semis. You look real quickly at KLAC. It pulled in a bit. I think that 48 might be some resistance there. If it fails at 48, it still has some more downside to go.
Teradyne, TER, how about that?
TER, let's take a quick look. Same type of thing. I don't know where it is now. It was holding strong until Intel and Texan came out. A bit of a correction. See if it could pop back above 13 and hold.
What about F5, down almost 5% on Wednesday?
F5 have had 2 big harsh down days. I think you could buy it versus yesterday's low for a trade.
And how about Under Armour? This is interesting. It's around its 200-day, but you know what? The National Retail Federation came out and said upgraded its holiday retail sales estimates to 3.8% from 2.8%.
That's interesting. And at the 200-day, usually they bounce first off that. So I just want to show you that chart real quickly. You know, you take a look here. You know, this is the 200-day. So you know, when it broke this level, that was your sell signal. You know, buying versus 200-day could be better for guys that are committed to Under Armour. So I would be a buyer versus 71, not a seller.
And then checking in on Goldman Sachs as a sort of proxy for the financial sector.
It's been so battered and bruised. It broke 99, which was my area that said, you know, they can get weaker. Right now, it seems like it's a short-term low, and I think it could bounce back to 96, 97 for a trade, but I wouldn't expect much more than that short-term.
And on top of having a totally insane week, we have quadruple witching on Friday, headed into the end of the year. How much volatility are you expecting?
You know what? The quad witching game is tough because, just to explain it, what they want to do is you have not only 1 month expiring, you have a whole quarter. And typically, you know, the dealers, what they're called, or the option specialists, they want to close these stocks and these indices as close to the whole number as possible. Because you know what happens? If you bought calls above, just say 1,200 on the S&P, and you close at 1,200, they all go worthless. They keep the money. You know, anyone that played puts below 1,200, it closes there, they keep the money. So that whole number game, the zeros, the fives, the 7.5s, 2.5s, come into play a lot more into quad witching. So just make sure you know that when you're trading your stock.
And then so for an investor, should they just be aware of that when we see some kind of violent movement over the next couple of days to not like get suckered in by that?
Yeah, don't worry about quad witching. It's more for a trader that's like trading a stock, and all of a sudden the composure changes, or trading a stock that was strong and then becomes weaker with the futures. You don't understand why. It could be the people behind the curtains pulling the strings to try and get it at that strike price.
And on that note, happy trading, everybody. I'm Alix Steel from The Street.
And I'm Scott Redler, so make sure you follow us on the virtual trade floor and in the chat. And if you missed that, we do a recap every day to go over the action.